HTJ.tax, the international tax firm for 6, 7, and 8-figure investors and entrepreneurs who are living that international life. Are you ready?
Within a year, do losses in a foreign-owned company, such as lease payments or building costs, etc., offset capital gains in equities or American real estate? So when you have different buckets or different categories of income, it's not automatic that you can offset one against the other. So if you have, an ordinary loss, you can't necessarily offset that against a capital gain, for example. So does loss, okay, so if it's a foreign company, so lease payments and building costs, that foreign company needs to prepare financials in line with the rules of the jurisdiction in which is incorporated, right? So I don't know whether in Costa Rica, I don't know what part of the world you're in, but the company needs to follow the laws of that jurisdiction in which is incorporated and in which is operating, right? It needs to follow domestic rules. Now, and those domestic rules would say what is allowable, what can be deducted from revenue. So you need to follow those rules. Normally the rules are comply. I don't know what part of the world you are, but there are international accounting standards. So they don't really vary that much. Sometimes they do a bit in terms of for tax calculations, but in terms of just the preparation of that income statement or profit and loss account and the balance sheet, it tends to be pretty standard. So you need to follow those rules. Now, in terms of the US tax consequences of it, I'm assuming that you are a US person, then it can get complicated, of course, but you are taxed to the extent that you receive a distribution from that company, whether it be in the form of a salary or consulting fee or dividends, then that is reported in your returns and you pay tax. Now, there are some deemed distribution rules, depending on the nature of your company. You may trigger something called the PFIC rules, Passive Foreign Investment Company rules. You may trigger the GILTI rules, Global Intangible Low Tax Income Tax. You may trigger Subpart F. So there are some deemed distributions, which mean that you can be taxed to your personal US tax return for a company you control. Even if you did not receive a distribution, you're deemed to receive a distribution, and therefore you didn't get the cash, so you're paying taxes on phantom income to the IRS. So that can happen. So you want to get advice to make sure you don't fall into that situation. Or if you do fall into that situation, there are ways of mitigating and managing it. But otherwise, if it is you have a company, a foreign-owned company, corporation, as you've said, that corporation will prepare its financials in line with domestic regulations. I hope that helps.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at HTJ.tax and live that international life.